Hey guys, I am Perry,
And I'm Dennis.
and welcome to our first weekly market recap session of this year. Here we will discuss this week's market movement and events and that of the upcoming week. First of all, I hope that everyone had a very nice and safe new year. We are very excited to start this year again with all of you guys and are looking forward to making this one hell of a profitable year. Let's start our session by diving into our market overview. First, let's take a look at the total liquidations of last week. If we look at the liquidations that happened on Monday, the 2nd of January, we can see that almost 14 million longs versus 16 million shorts got liquidated. This happened while Bitcoin pushed above the change of character level at 16.7k, pushing towards the daily EMA25 level again, where we found rejection and have been consolidating between these two areas for the most part of the following 3 days. On Wednesday, the 4th of January, we opened below the 16.7 choke level, and many traders believed that a push down towards the 16.3k support level would have been a logical next move. However, after a brief push above this level again, we started to gain momentum and pushed right through the daily EMA25 level and through the 0.236 Fibonacci retracement level. A lot of short orders were placed at the EMA25 for a rejection, which created a big liquidation wave for the shorters at this level. Here at the total liquidation chart, on the 4th of January, we can see that almost 100 million shorts versus 13 million longs got liquidated around the EMA25 level at 16.8k, which confirms the fact that people were expecting the rejection on the EMA25 level to be much stronger than it turned out to be. Later that day, the price started to decline again, unable to hold the 0.236 Fibonacci level for support, but managed to stay above the EMA25 level at 16.8k. The following day, not much has happened, while we could see the price briefly push below the EMA25 again, but managed to close above it. On Friday, the 6th of January, the day opened with a steady push down towards the change of character level at 16.7k, followed by another push back up, creating a higher high below the EMA50 level and above the 0.236 Fibonacci level, which is currently our local support together with the EMA25, where we have been ranging for the rest of this weekend. Liquidations wise, we can see that both sides found themselves getting liquidation on this unpredictable day, with 21 million longs versus 38 million shorts getting liquidated. With the weekend being very calm with no ordinary liquidations or price movement happening on Bitcoin. Everyone is waiting for the weekly close and the price development on Monday and the rest of the week, in which we will give our own opinion in the outlook later down within our live session. But first, let's take a look at the volume and volatility sheets for a little more confirmation on the price action of this week. So by looking at the volume and volatility sheet here, we can see that both the volume and the momentum dried up since late December, showing pretty much no strength at all this week, overall being pretty steady, except the 4% price increase pushing us above the daily EMA25 level. The possibility of testing the EMA25 level as support again could be a very reasonable scenario to look out for next week, as our two main key levels right now are simply set to be the EMA50 level at 17.1k as resistance and the EMA25 at 16.8k, together with the choke level at 16.7k as our support. Looking at the daily buy flow chart here, we can see that about 428 million worth of stablecoins has been flowing directly into Bitcoin today, which is an underwhelming amount as the average daily buy flow towards Bitcoin is somewhere around 1 billion. Buying wise, this could indicate that there has either been less fiat circulating within the market right now due to holiday spendings, for example, or traders awaiting a solid breakout before entering trades with a larger bag size again. The top performing altcoins here are Sol, ADA and Gala, with around 70 and 100 million stablecoins flowing into them today. And by looking at the daily sell-flow chart, we can see that about 1 billion worth of Bitcoin and about 400 million worth of altcoins has been flowing back into stablecoins again. This altogether could indicate that people are feeling unsure of the upcoming market movement, showing us that the majority of the market is again playing it safe, with their fiat mostly in stablecoins until after the weekly close, until there has been a more clear market direction to possibly re-enter the market again.
Over the past month, Bitcoin dominance ran right into a big resistance block at 42.3%. It was unable to break this, and over the past week it retraced back to its first support level at 42%, with the Bitcoin price ranging between 16.6 and 17k. This resulted into some bullish momentum on altcoins the last few days, with money flowing into the altcoin market again. Right now it's holding its current support level over the weekend. For the next week we're looking at 3 scenarios on Bitcoin dominance. The first, a pump from the current support level above the 42.3% resistance. A flip of this level into support will probably coincide with a drop in Bitcoin price and result in a weakness across altcoins. The second scenario, a retest of the 42% resistance area followed by a rejection there will give some solid entries for altcoin longs in the coming week. And the last scenario, losing the current support level at 42% with the Bitcoin price staying stable or slowly pushing up, will cause some big pump on altcoins. And now for Tether dominance. With Bitcoin ranging and Bitcoin dominance looking for support, we saw liquidity slowly getting injected back into the crypto market. The Tether dominance chart shows a rejection at the 8.85% level and Tether dominance being at a lower support level at this current time. If we lose this level, we'll see a drop from 8.45% to the high time frame support at 8%, resulting in some solid pumps in the crypto market. Macro-wise, the high time frame uptrend is still intact and is currently crawling towards 8% as well. With Bitcoin ranging, Tether dominance is also stuck in this range for now. And now for the global market recap. First, the SPI chart. The stock markets enjoyed a nice push last Friday. The markets reacted on the news of the US wage growth decelerating in December, which suggests the Fed is starting to make progress in taming inflation. This is filling the markets with hope that the financial policy of the Fed will be softening throughout the coming year. Chart-wise, we still see both SPX and SPI price in a high time frame downtrend that started exactly 1 year ago. Price is searching for support after failing to break out of its downtrend that it started last December. The 1.5% push this last Friday brought the stock markets to an important resistance level. Reject here and the indexes will be looking for new lows. A push above this level will signal another attempt to break out of this downtrend. DXY had an extremely volatile week. It showed strength by pumping from a big high time frame support level and even attempting to break out of the current range in which it consolidated since the 13th of December. It got rejected right back into support on the news about the US wage growth I mentioned earlier. Much depends on the official CPI figure that gets released coming Thursday. If consumer inflation is following the same path as the wages and is also declining, then DXY will probably see more downside over the coming weeks. And that of course is generally bullish for stocks and crypto. A sharp decline in inflation rates will have significant impact on the rate setting agenda of the Fed, as they will most probably slow down their pace of interest hikes. Markets will react heavily on this news, so keep that in mind when trading the coming week. The relief in the financial and crypto markets past week showed mostly winners in the top 100 crypto by market cap. General sectors that pumped significantly were the metaverse coins like Sand, Mana and Ape, and AI coins like Ocean, FED and NMR. With all the news surrounding the revolutionary AI of ChatGPT, interest in AI cryptocurrencies surged. This caused a major spike in demand in this sector of crypto, with Fetch AI's FED token even pumping over 60% in the past week. The prospects of these projects to integrate blockchain technology into AI is enough at this moment to let demand for these assets surge. When we look at the top 100 crypto by market cap, we see a big pump on LDO. LDO offers staking solutions for proof-of-stake protocols like Ethereum and Solana. LDO is ranked highest in TVL or total value locked for staking solutions with over 5.95 billion in value locked in. This news was the major reason for the almost 80% pump over the past week, as investors gained significant trust in the future of this asset because of this. Another notable gainer in the top 100 was Solana. After the huge sell-off it saw in November and December, which was primarily caused by the FTX debacle, it finally saw a nice relief rally of almost 35% on the week. The release of a new meme token named Ponk reignited interest in this former golden child of crypto. Solana still houses a large amount of decentralized applications and is the currency of many NFT marketplaces. The coming weeks will tell if this was just a dead cat bounce or Solana was a really undervalued asset.
The current market outlook for Bitcoin the coming days is to stay above the 0.236 Fibonacci retracement level. To test the daily EMA 50 level as resistance, here we could see the price move towards the 0.35 golden pocket level at around 17.6k. In order to do that, we will first need to close above the 0.236 Fibonacci level at around 16.9k and flip it into support. Unable to stay above that 0.236 Fibonacci level at around 16.9k, we'll push the price back towards the choke level at 16.7k. If this is the case, it would be a possibility for the price to move towards the lower support area at around 16.3 and 16k, which could start the first quarter of 2023 in a very bearish scenario. However, let's first wait and see what this week will bring us.